Yo, yo, yo. Good morning, everybody. Good morning. Welcome to the Apex Brotherhood Tuesday morning session. London Open. I hope everybody is ready for another day. Let's have a very quick disclaimer and then we'll get straight into things. All right. I'm going to be honest with you guys. I am feeling today. I did not sleep very well. That should be good. Yeah, first of all, did not sleep very well. Secondly, woke up this morning feeling a little bit under the weather. Bit headachy, but I don't know, just not feeling 100% today. However, we're gonna try our best. There's no point in complaining about things not feeling well. We have to just knock it out regardless. I got to do my screen share. Okay, let's get the screen up and going. Here we go. I hope everybody can see the screen nice and properly. We've got pound on the left-hand side, and on the right-hand side we have got euro. Oh, let's have a very quick hello to everybody that is sitting here at the moment. MGN, good morning, bro. How are you? In the wilds, Ilias, how are you, mate? LJ, dude, welcome. Is this your first time in? I'm not sure. Well, welcome. We're supposed to have Will in today, but Will has got a few meetings that he needs to attend to, first of all, so he's probably either not going to be here or he's going to be in later. I don't know. Bigs to be seen. All right. What the hell do I want to do now? I am all over the place at the moment. All right. Cool. All right. Let's start with... let's just do this. All right. So this is the hourly chart on pound. Yesterday, both on the terminals and on TradingView, we had this gap, which was the rollover basically from the weekend into Monday. We had quite the rollover. Day open, price moved lower, tapped just close to this low point of Thursday, pushed back into that little gap during Tokyo, and then we moved lower, but we didn't really get that like deep volumetric move that we would have expected if there was like real strength. Price rejected and moved up solidly, took out this whole gap in its entirety. However, when it reached the very top of London, a very top of Friday high, it just wicked above, consolidated a little bit at the end of the day during New York, and then just started moving lower. So the way that I'm seeing it at the moment is we have a little bit of a we can call it an area, a little resistance area over here, that seems to, it was tested once, tested and pushed through, and then rejected off of it, and then tested it yet again. So we have 3 tests, 1, 2, and then 3. On the upper end, we had last week a higher high, a lower high, a lower high, and then an equal high. So as it stands at the moment, I would want to see price come and retest down here again. just because we've had the 3 previous tests since last week. And then I would like to see how it reacts off of this area, whether it's going to push off of it strongly. Because, I mean, on Thursday we had this massive drop down into it, just wicked through, and then didn't close below it on the hourly at least, and then consolidated a little bit, and then started pushing higher. But we didn't create a higher high. So to me, this is looking a little bit sideways. Only purely because we have a double top and then a double bottom effectively. So I want to see movement either in or away from this area for today. And I mean, it's not a massive range, to be dead honest. It's not even 30 pips. So we can easily have that happen with London. Within London, I mean. If that doesn't happen and we decide to move off of an order block, there could be an order block over here on the 15, which I will have a look at now. So price moved lower yesterday, failed to really create a lower low. It just wicked and then made a little 15-minute base area over here, which is just above that support / demand zone. Sorry, I don't know what's going on. I have heartburn. I have like indigestion, gas. I don't know what the hell's going on. My body is just not wanting to work with me today. We do have a 15-minute bearish base over here, which is within this little bit downtrend since this morning. We've been bearish this whole morning since day open. So I'm still on the idea of us potentially having bearish movement. Push through this base to come and test this bottom section is what I am looking at. So I would like to see sells. If I wasn't feeling like crap at the moment, I probably would have wanted to have been in there as an example and then try to get a short, because it is perfectly in line with the short-term downward trend that I like trading. So for the time being, I am bearish on pound, but bearish up until we reach this support line down here. If it breaks through, then obviously strong bearish, but if it doesn't break through, then I'm still going to want to see it react off of it before I make a decision. Let's have a look at EU. EU on the hourly so far is bearish as well. But we had this gap yesterday, which got filled up to about that point. Never really came to test it. Now we have, this is on the 15, it's not on the hourly. Made 3 bullish candles and then dropped off just before, but this is because of that the Prime Minister of France deciding to step down, or at least handing in his resignation. The market then took back most of that downward movement, didn't reach all the way to the top over here, to the section over here. We still have this nice little gap that can still be filled, but I don't think it's going to be now. Not today, at least. So reached into this hourly area, consolidated around it, started moving lower, and then made a bearish base, and then started moving lower. On the 15-minute, it's not as clear. Wait, let me do that. We have a look at price moved lower, bullish movement, bullish retracement, plummeted on news, took back all of that, and then reached a plateau. So this area over here is like a little bit area of consolidation. The last attempt to push higher, did it wick into? It did wick into this little box over here. So this would then be a bearish 15-minute base. Price wicked into it, never really attempted to touch it again to try and react off of it. So this area of consolidation I do kind of like. Price pushed a little bit lower. If you take into consideration this was the most recent low swing. Let's not call it the swing, but the attempt to go lower was this little point here. It basically wicked it and then broke through it, closed lower, attempted to push higher. Now we have a small little area over here. Yeah, something like this, where price then never really attempted to go higher and then just started plummeting. So I would like to see, with this in mind now specifically, I'm just going to keep that one there for now, and this gap I'm also just going to make a little bit smaller. What I would like to see, price came down. This was the last attempt for it to really push lower before it started heading up again. I would like to see this area tested into. So I would like to see price come down into it and then decide what it wants to do in this area. Obviously, with the news that happened yesterday, there might be quite a bit of downward pressure still. I mean, if we just look at all of the major pairs, GU, EU is running in the negative. AUD, NZD also is running in the negative just on the day. I'm not even like opening up the chart, just looking at it on the day, it is negative. US CAD, UHCHF, US JPY, all positive, meaning that we have some dollar strength. It seems as though dollar is moving a little bit more bullishly. So in this case, for the euro dollar, I'm expecting more downward pressure, at least to come and test this and then potentially break through. But this, once again, begs to be seen. What does gold look like? Gold, we had all-time highs, new all-time highs, but it's slowing ever so slightly. We've got like this curve that we're seeing now. So there's definitely some slowed momentum as of yesterday, at least. No massive drop-offs. We do have a bit of a drop-off now. But overall, it does look as though we have slowed momentum to the top, but we're so close to that 4K mark. I mean, 4K is up over here. We are so close to it, mate. It's ridiculous. $20 away. The high point of Tokyo was $20 away. And this is $46. So the only concern is the fact that it's slowing. It's slowing its ascent to the top. And whenever you do have a higher high and a reaction, there is a nice big candle on it, but it's almost within a few hours taken out again. There's another reaction, it's taken out within a few hours. Here's another reaction. This is the first time that we have a high, an equal high, and then it starts pushing lower. So I'm going to be careful with gold. I don't know whether or not psychologically the fact that we're so close to 4K, that there's so much more selling pressure that's going to start kicking in. And this is on the 15, on the hourly. But yeah, we have, this one just opened up now, but we have 2 consecutive bearish candles, and then we're busy printing a third one. And even if this one were to go bullish, it would have quite the wick underneath. And I think that's the most, apart from over here, where we've had multiple bearish candles, more than 2 at least. And then obviously just here, but this was also because of new highs. And then this basically became an equal high point. But we're still printing higher highs, higher lows, higher highs, higher lows. Where this one's going to print, I don't know. But I mean, overall, okay, this was probably the break area over here. So this was the point where we actually started printing higher highs yet again over this period, because we had equal highs, a lower low in relation to that area over there, a higher low, a lower high, and then we started making higher lows, equal high, and then so on and so forth. So As it stands right now, I am still on the idea of gold is still bullish, but it is slowing its momentum to the top, meaning to me, I'm going to have to be very careful where I decide to just jump in. Specifically because we're so close to this 4K markup over here, which is a psychological level. Even numbers, it's the 4K is the idea that everybody wants to see 4K. So, I mean, it's almost $50 away from reaching 4K. It can hit it today. It can hit it in the New York session, as an example. If Tokyo is like very strongly bullish, as an example of yesterday, strongly bullish, then we have a little bit of consolidation, and then during London, and then when New York opens up, we have the rest of the push. But if Tokyo is more bearish or flat, like we had over here, the beginning sections of London is also a bit flat, but then you have the move even before New York, as an example. Here it was flat. You had a little bit of flatness during London, then the push, and then obviously we had that massive drop down. But past results is not a guarantee of future results either. So be careful. I think we can still try and test 4K. Can happen today. Will it happen today? I don't know. We are seeing a lot of bullish pressure coming in on the 15 as well. I mean, we've just barely wicked higher here, and then we made an equal high, and then another equal high, and then Tokyo low has just been broken now. On the 15-minute, here is an area that there is a potential test if we were to push a little bit lower, and then there's also the potential that it needs to break lower than this little area here where it's really close to. Because I mean, if I just, okay, come on, here we go. If I just pull this back, that's effectively the last new high, attempt to go lower, fail, make a new high, consolidate the whole of yesterday between these two areas, break up, test it again, and carry on. So this area where we are right now is going to kind of like indicate whether or not we're going to push lower to this area down here and then potentially lower, or whether or not we're going to just rebound off of it and then start attempting to make a new higher high. But I do think if we make a higher high now again, it is probably going to, the next high is going to be 4K. Something in that regard. Let's just do that. Right, let me catch up with chat quickly. In the wilds, I have soda water. Don't die on us, brother. I have some. I don't know what you call this. This is like a vitamin C tablet with some ACC and all kinds of other nice goodies. Doesn't taste all that great, but it might help. The Davies brothers, morning guys. Thought I would pop on and say good morning before jumping into my next meeting. Thanks, mate. We really appreciate it. Go and do your meeting, mate. I don't know. I don't know what you mean. Wait, Rich. What's the daily move then? Because I have a clue. Because I never have a clue. Daily move on which? On oh, you're probably saying, can we predict the move? Yeah. Nice, Barry. Nice. The daily move. The idea was it was going to be me and Will trying to predict it, because we're not. I'm a reactive trader, and I think Will is also a little bit more of a reactive trader. But I think he can make better predictions in terms of where he expects the move to go. Myself, when it comes to, let's say, GU, I usually use these base areas to say, listen, if there's a reaction off of this base, then I expect it to attempt another base, as an example. But we're so, let's not call it flat, but we're a little bit range bound at the moment. We're making slightly higher highs. So if there's a reaction off from here, even though I did say that we are quite bearish over the day, let's say, if there's a reaction from this square little base area, then we will definitely test this area at least, in my opinion. That's what I think is on show for London and GU. If we don't break this, otherwise we are definitely going to carry on pushing lower to at least test this bottom area. With the fact that I'm seeing a bit of dollar strength at the moment, and then EU still, yeah. My idea is that we're going to come and test this this base area over here, and then if we, yeah, because I mean it's in line with the test of what was this, the 25th of Thursday. That low. Do we have more lows? An area down over here. Yeah, it's a little bit lower. Oh, but we did wick into this one. So if price does break below this base, this is going to be the test point. Whether or not it's going to be the middle or the top of it, or it's just going to wick into it. So what is that price? 1645. So if we do break lower than this 15-minute box, then 1645 is the aim point, at least, because that was the lowest point that it went on the 25th. Will saying, don't forget to like and subscribe. Yes, mate. Guys, like and subscribe. It is, I know it sounds so cliche to ask for it, but it does help the channel. The more interactions there are, the algorithm sees it as something that people likes, and then they start presenting it to more people, or showing it to more people, at least on their feed, if it's something that they might be interested in. So that's a nice thing. We also have, this is an hourly one. Do we have a 15 one? Semi-consolidation, lower push, a bit more consolidation. So over here, this was the last area. So we have a 15-minute area there. If price does decide to react, we do have a small little 15-minute. It's clicked. Where we are currently, we'll see how it reacts on this one. I'm going to turn it into a 15-minute base, but I expect the bigger reaction to be from down here. If we do, hypothetically, react off of this box, then this higher point over here needs to be tested, and then Tokyo low, and then a push higher. Because if you basically draw a line and see that where it made its higher highs and its higher lows, something like this. The only issue is that every time we have a small little break of structure, or is it change of character, break of structure? I never know. If it starts closing lower than these swing points, then it's usually an indication of it wanting to continue in that area up until it breaks the new swing area and closes above. So this is what I'm waiting for. I'm waiting for the reaction. Obviously it's bearish, but it can just as easily turn bullish. Gold too high for a long, but don't short that thing or you'll get your face ripped off. Yeah, mate. Gold is at that point now where I feel like any slight move to the upside is going to garner big downward reactions, because that's what we're seeing every time there's effectively a new high. Because this was the new high. I don't know why I'm stuttering, but well, let's say London was the new high. It pushes in, creates a new high, plummets down, trades all the way up, creates a new high, not over there, up over here, plummets down, new high, plummets down, new, well, equal high in this guy, and then starts plummeting down. So I agree, it's still quite, on the higher time frame, it's still quite bullish. However, it is on the daily, it's starting to turn a little bit bearish. So be very careful. If you intend on trading gold, just be careful. If you're expecting it to go higher, there is the possibility of it going higher, because 4,000 is a psychological level. But as people have explained before, the idea that gold is at a point where, or we're at a point now in the year where people will maybe start wanting to take leave, start, reducing their risk, taking off some of their risk, maybe be a little bit more risk off. But the idea is that people are going to start wanting to take profit from gold, because gold has been going for forever in this bullish direction. So are we going to reach 4K? I believe we are. Is it going to be today? I don't know. Maybe, maybe not. I mean, yesterday's whole move was incredible. Oh. The whole of yesterday's move was 86, 87-ish dollars. If you add 86, 87 dollars from where we are now, you're reaching 4K. So it can happen. It's easy that it can happen, or it can easily happen. It's rather say. This is a daily candle, daily bearish candle, double daily bearish candle, 2 days in a row negative. So we're still bullish. But every now and then you get a bearish candle, you get a bearish day. So here we had 3 bearish days, 3 bullish, 2 bearish, 3 bullish, 1 bearish, 6, 1, 2, 3, 4, 5, and a bearish, and then 2, and then it looks as though we 13 hours, and then we might have another bearish one. We don't know. But what I'm expecting to see today is the potential of a bearish day, because every 3 days, at least 2 to 3 days, we're having 3 days bearish, 3 days bearish. This was 5 days, and then a bearish one, 2 days bearish. So yeah, no, I agree. It's been going bullish for such a long time that it feels like it's overextended. It really does feel like that gold. But once again, like, you can be so confident that gold's going to carry on going up, and then gold just decides, nope, I'm just going to, come down a little bit, and then everybody's like, oh yeah, now we're getting the turn. I don't think so. We need to close. If these are like the daily swings, as an example, at no point did we really have a swing and well, here we had a swing and a close lower, but just barely. But then it was immediately followed up by more bullish days. Here we had one that was also tested. Here was another one. Here we go. Here was another one. But like, it's so short-lived. I feel like we need to have multiple consecutive ones. Let's say, for argument's sake, you have this downward movement. In order for gold to start really showing that it wants to go lower, this candle, this daily candle, from here it should have started pushing lower, or at least printed another bearish candle and then closed lower than this point, and then attempted to go higher again, and then fail, and then start going lower. But we're so far from that, I feel like. I mean, what area do we need to... We have a swing point, a daily swing point over there, and then another daily swing point over there. These are the 2 daily swing points that I feel like need to at least be tested and then completely disrespected. It needs to break through it, close lower. And how much does it need to go from where it is right now? To reach that point, we need to lose $66, which it can. Like, the probability is there. It's probably not a strong probability, but it's there. So it needs to lose $66 today from where it was when I marked it, at least, to close lower than that point. Would we see that? Maybe not. Are we going to see a little bit lower? Potentially. And then the next upcoming days, the next weeks and whatnot, will really tell us whether or not we're going to have that bearish turn. For now, it's still bullish. Pooley, good morning, mate. How are you this morning, mate? Myself, I'm feeling a bit under the weather. I've got some medicine. Ooh, that's tart. In the wilds with gold, just trade the chart in front of you. Don't over speculate. Just move with it. I agree. I feel like I don't do the best like predictions, which is funny because my online nickname was the Oracle, but it had nothing to do with my predictions. It had everything to do with Will's account predictions or predicting his account's movements. I react to the market. I'm not a swing trader. I'm not someone that like really holds my trades for much longer than, let's say, an hour and a half at least. So I want to know where price is theoretically going to be within the next 2 hours, as an example. I don't really care about the daily or the 4 hourly in that regard. I do use it to see if there's areas that potentially can be tested. But other than that, I don't really use it. The hourly is probably the highest one that I would go and have a look at for immediate structure. And then, I mean, obviously you want to see, on for argument's sake, the 4 hourly if you've had, like in this case, up over here, on the 4 hourly, you've just barely wicked. What was this? This was on Thursday, last week. So the reaction off of that point, I care about. But I would care about it on that day. Won't care about it right now. Hello, buddy. Scene 7 somewhere. 7? Oh. Buddy, seen you somewhere. Yeah. I'm an enigma. I'm all over the place. When you just think I'm not there, I'm all of a sudden somewhere else. No, it's the Fiverr stream, obviously. Is anybody currently in something that they want to discuss? Because I need some talking points. I am like, I don't. It's probably damn obvious, but like I'm sitting here and I'm like, I feel like I'm hallucinating. I did take some tablets, not those kind of tablets, just regular, like ibuprofen / paracetamol. I can't remember which one it was. 15 minute. This is hourly. Just wicked into this. What does it look like on the 15? Slight reaction. We have a 15 minute. Wait, is this one more of a 15 minute than this one? I mean, it just wicked off of it. So this is a break and retest. So I'm going to make this a 15 minute bearish for now. Let's have a look on the 5. Oh yeah, it just straight up just wicked against it. We have a little bit of slowed momentum at this point. It is reacting off of this 15 minute base as of now. So it just wicked into it. So for those who don't know what I'm doing when I mark up a base area, I'll just try and explain it quickly. A base area to me is an area within a trend. So within either a bullish or a bearish trend, or it's an area where there was a very strong reaction. And I know people like Victor and whatnot refer to them as order blocks, which is probably what they are. It's just an area where a large reaction, let's say a large amount of buyers, in this case, there was a lot of sellers trying to push it lower. They failed, and then you have this monumentous move higher. So you have multiple, and this is on the 15 minute, bear in mind. On the 15 minute, you have multiple bullish candles reacting out of this area. So technically this base area over here is the last area where sellers had any chance of trying to push the price lower, and they just failed. And then the bulls took over. But you have, this is at like a swing point, at a high or a low, but you also have them during trends. So in this case, I view it as, here you have a consolidation, you have a reaction out of the consolidation, it pushes lower. This bullish base in this area over here is an attempt of the bulls to try and break the trend, to try and break the bearish trend. And then the very next candle is the confirmation that the bulls have no control here at all. But it becomes a base area because what happens is when price does decide, or when the bulls do take over a little bit and they do attempt to push the price higher, these areas, the base areas, are areas where typically price would attempt to come to and then react off of it again. So it was the last area where there were buyers. The buyers couldn't push it out of this area. Bears continued pushing it lower. The bulls tried to come and test it again. They couldn't even reach into the box. In this case, it just wicked off of it, and then you reacted again. So a really nice area as a confirmation would have been to take the trade there, as an example. Once again, this is hindsight, but like I'm trying to explain the way that I see the movement. Typically, these bearish and bullish base areas on the 15-minute tend to hold often enough during a downward trend. And you can, okay, yesterday was a bit of a consolidation area, but if you just consider price pushed up, it attempted to break the Tokyo high yesterday. It failed. It made a very big wick, pushed lower. This was obviously at the same time the news came out. It attempted to push lower, tried to pick up again, and then started pushing lower again. So this could theoretically have been viewed as a bearish base, a bearish one, because we had the Tokyo high that was tested, broken through, but not closed above. But once again, still just on the 15-minute. I'm just viewing it on the 15-minute. Obviously on the 5-minute, we probably had a close above that area. Yes. But for the sake of argument and for the sake of example, I'm just looking at the 15-minute. So you have a base area here. Price pushes lower. It reacts off of, or it wicks into this area, this support zone down here, reacts off of it, wicks into it, and then starts pushing lower. Now, if I did not have hindsight in mind, obviously, I could have potentially wanted to put a trade in there, once again, tried for a 1 to 1.5, but in this case, it would have failed. So it doesn't work all the time, or every time, let's rather say. But this, to me, is not a day that I would normally try and trade it because of this volumetric reaction off of a small area, and the fact that we just pushed into this zone down here, technically. So this wick over here normally would suggest a reversal. It doesn't always confirm a reversal of any sort, but you tend to see this at the end of a run. So it's trying to push lower, it fails, you tend to see large wicks, no body, and then a reversal. So I would have been less inclined to take this trade based on the idea that this is a reversal point. Typically, we've wicked into a support area and reacted off of it, and we had a big wick above the Tokyo high. So technically, this whole section here, if this was the daily low as an example, we just basically wicked below the daily low on the day yesterday, and we failed. So I would be less inclined to try and take a trade from here. I would personally have liked it more if this candle, this big bearish candle, was a bit smaller, so that we had a reaction something like that size bearish candle, and then we had an attempt to push higher, but then fail, as an example. Okay, now I've screwed up. An attempt to push higher and then fail, so a bullish, this would be a bullish candle. Let's make it bullish. So we have a bearish candle and then a bullish one, and then we follow that up by another bearish candle. That is what I would rather have wanted to see happen here instead of this massive candle, because then we are at a recent area of interest, which is the Tokyo high, which tends to act as a bit of a resistance point sometimes. And then the reaction off of it would have then said, okay, cool, we're failing to break higher, we didn't close above, we're printing, we attempted again to push higher, which failed, and then we started printing lower. And then on the bearish candle I would have wanted to take a trade more like. My stop loss is always static, so it's always 10 pips. Would have been in a better area versus where it was down here. Because it just, as easily as it pushed down, it could have just pushed up based on how strong these downward candles were. But at the same time, we're not really breaking structure. We're not really pushing deeper lower lows. So that's just an example of what I would have wanted to see rather than what we did see. So today, yes, I like these candles more, where you have the same volumetric move, basically, the same amount of movement going down, but it's segmented, it's broken up. So if we had this kind of movement here, that would have been more in line with what I wanted to see. Obviously, hindsight, I can see what it did now, but I can only see up to this point, effectively. That's what I can see. So that's how I would base my trade. It's bearish. It's making a bearish base. It reacted out of it. It attempted to push in again. It fails. I would enter here. I mean, I could have entered there as an example, but the point still stands that this is too big of a bearish candle. I would have had to have pushed my stop loss above it just to be safe. So I have to wait to see, okay, this is on the 15th, so it's pushing lower. Are we going to have another push lower deeper from there? So are we continuing the trend, or are we going to push back a little bit? And that's where I sometimes use the MACD as an example, but I would go down to the 5-minute with the MACD to see whether or not the reaction is still as momentous. You can obviously see it on the candles. Okay, we pushed lower, we made this indecision candle, or this reversal candle, let's rather say. Bull candle, bull candle, bull candle. It seems as though it wants to push higher from this point, or at least it doesn't seem like it wants to be lower than this point, as an example. So I would then wait. I would wait until I see the reaction off of this bearish base on the 15. And then I will then decide whether or not I want to enter. This would have been a successful trade, but once again, this is hindsight. But it just gives you a bit of an idea of what it is that I look for. What I look for when I'm looking, let's say, during a session specifically for a trade. So I don't care what price is going to be like at 5:15 or 3:15 this afternoon. I don't care what the price is going to be here, because I'm not going to be trading there. My trading plan is from basically, let's say, Frankfurt open, which is just on the close of Tokyo, up until New York opens just slightly before. So let's say around here by me, 3 o'clock in the afternoon. So this is my trading window. This is where I like to trade. So it works for me. I feel like I went on a tangent, but I feel like I explained it decently enough. Barry saying, I'm short DAX, it is fighting me. DAX. Are you? No, you're probably not on the futures. You're just straight up on CFDs, correct? Oh, I'm sorry, I missed this one. Bupe Kunda is saying EU short. Yeah, no, I agree. Short it's reacted off of this. This is on the 15-minute. So I'm just going to remove these swing points because that was for illustration purposes, and then I'm going to remove this one because this was what I initially wanted in anyway. Bearish base, but this is the breakout base. So technically this should be a support and resistance point, technically, as is this bottom one down here as well. Yeah, because this was the area where price turned, and then the bases is areas where it potentially can come and react off of. So this one on the 15-minute, it's closed, so this is now no longer a valid base area anymore. Excuse me. So the base areas are here. This is a base. It's a bearish base. Two candles max for a base on the 15-minute. So 1 half-hour candle, if I had a half-hour time frame up here, probably would have been this. Probably would not have been this one. It probably... Let's see. Yeah, okay, so it would have been that one. So half an hour max as a base. So 2 candles on the 15-minute as a base, pushes lower, pushes into it, and reacts off of it. You could have placed your entry point there as an example, tried for 1.5, and it would literally have just taken it now. But you alternatively could have taken, this is the bearish movement, it makes a base, and then it confirms the bearish movement with this one. If the candle is not too large and your stop loss can be high enough above this box, basically the top point of the box, so you have all of this above as room for your trade to move, to breathe, basically. So if you do go into drawdown, it's less likely that it's going to wick above this if we stay within the bearish trend. So overall, the idea is to wait for it to either, like it did with GU. GU was a very large candle, so I can't enter here. I have to wait for it to push back and react and then push lower. EU is a little bit different. The move itself was not that volumetric. The continuation, let's say this candle over here is the continuation candle of the bearish trend. It's not as volumetric. If I entered here, it would have been fine. I could have waited for it to react and entered over there, which would also have been fine. But this is the early entry. So you tend to have a little bit more drawdown. So in this case, this would have been 2.6 pips. You have some drawdown on the first one, but the confirmation one, which is this candle over here, along with the bullish one right next to it. The bullish one attempts to push higher, it fails with the confirmation on this one. With this, you have a lot smaller, a lot less drawdown. It's 1 and 1.3, so let's say hypothetically it's like 1.6 pips of drawdown that you would have had. So technically, this trade would have been in profit almost immediately and carried on going lower. So the idea is exactly the same. You're waiting for a bearish push, a base, and then a continuation or a confirmation of continuation of the trend, which is that next candle. But the size of that candle plays a role. It impacts whether or not you're going to be running a drawdown or whether or not you're going to have a reversal, like I explained with pound. If it's too large, you would be wicked out, or hypothetically, you would have had your stop loss much higher, which then would have reduced this, for argument's sake, to a 1-to-1 trade. That's just my way of looking at it. Gold has made a 15-minute base candle, but this is a large one, so it's got a very big wick. Oh, and when I do the bases, it's the whole candle. It's the wick and the base, all of it, because that during that time frame, it's the whole candle, the whole movement. Ooh. This candle over here and this candle over here is probably going to be a little bit of a interesting area. I don't know. I don't think we're done with the bullish momentum just yet. I mean, on the hourly, we've had this whole zone here where there was bearish pressure, which then got invalidated as it pushed higher, and we're just wicked into this area now. This is the hourly. The hourly MACD is still showing a lot of bearish momentum, obviously because of the big candles and how the price moved prior to. Infinity is saying, I made an entry on that candle 50-minute on gold. Is that correct? What kind of entry are you referring to? Are you referring to a buy or a sell on gold, Infinity? So this is the 15-minute. Come now. Move away. So are you referring to that one? Oh, a buy. I don't know. If that is an area which you would have wanted to buy, myself, I don't buy on the first reaction of an area. I wait for the confirmation. So let's say it's pushing bearish. So equal highs, it reacts strongly. It makes a bullish candle in a bearish trend. So here. Oh, come on. So here we have a bearish candle. After it's reacted off of a significant level, in this case the higher high, then it pushes lower, makes a bearish candle, continues pushing lower, makes another bearish candle. But the difference here is there is a massive wick underneath this 15-minute candle, and it's followed up by a massive wick in relation to the body of the candle itself, just after it. So in this case, if you wanted to put in a buy, what you would have to wait for is the confirmation for the trend to turn. So you would wait for a hypothetical area. Let's say it's down here. Wait, let me do this. You would need price to go into an area. Bugger off. You need price to go into an area, attempt to push lower. Let's say have a wick underneath this area. Let's say down over here as an example. Push up a little bit, attempt again, and then start doing something like that. So in this case over here, what you would need to see is the turn of the reaction, or the turn from bearish to bullish. In this case, we have no bullish confirmation as yet. There's nothing saying that it's turning bullish from here as we are talking now, because this wick down here, yes, shows usually an indication that price attempted to go lower, it failed, and then it's closing higher. It's not a one-to-one correlation that if that happens, we're definitely turning bullish. Myself, I would have waited, not on this candle. I would have waited for it to turn and do something that's more like this area over here, as an example. So here, price pushed lower, it started pushing higher, it attempted to go lower, it failed, and then started pushing higher. And then hypothetically, I would have wanted to rather be in that more for a buy, and I would have gone 1 to 1.5 as an example. It would have been a loss, but that's more in line with what I would want to see. This to me is still bearish structure, and I won't buy in a bearish structure. Does that make sense? So personally, I would not have bought here. And I would not have bought on this candle as an example, on this quote-unquote confirmation. I would not have bought here. That is the wrong one. That I would not do that. But if it is a part of your plan, if you have backtested data that suggests that now is the time to enter, then you follow your plan. I'm illustrating what I look for. To me, this is still bearish. I have no interest in buying on this specific candle. And once, let me just preface that. It's in a nutshell. It's like a very you can imagine I'm only looking like this. If that was the daily open as an example, this is what I generally just look for. This is what I look at. I don't generally like pull all the way back. I'll have a look at the previous day just for illustration purposes to see if there's any significant areas that had certain reactions. But in general, this is the view that I have. And you'll see when I do have 2 up, it's usually something like this as an example. So I would focus my attention on what is happening on the day. And to me, everything is bearish. So I'm not looking for buys, at least yet. Not now. Yeah, God, thanks. Okay, yeah, cool. No problem, mate. You can also, if you wanted, you can chat in YouTube as well. Or if you're not logged in, obviously, you can't then. But if you were logged in, you can also just post your questions here. But it is fine on Discord because I do have Discord open, so I can have a look there. Just every now and then, just throw an eye there, and then I'll see your questions. But yeah, guys, keep posting questions, or at least just chat. Let's get that them chat going. So yeah, here we have a bearish confirmation of a bearish base. To where are we going to head? We've already wicked lower than this swing area. We haven't closed. We've got 2 minutes before this bearish candle, or this 15-minute candle closes. We'll have to see whether or not, let me just go back to this. We'll have to see whether or not this swing point is going to be respected, or if it's going to be absolutely broken through. Then we have another swing point, and then the last swing point down here. Just the most recent swing point. So I'm not referring to that as a swing point, for example, because that swing point was already broken through, pushed through. So that's not what I'm looking for. I'm looking for the most recent swing points to say, okay, is it continuing, or is it potentially going to react off of that swing point? So yeah, still bearish. If it closes now in the next minute and a half, then it's still a confirmation of bearish. We have an area over here that to me seems more like a testable area. Oh no, that's 15 minutes. That's 15 minutes. What does it look like on the hourly? Oh, we have this area. This whole section here that can be tested. So all of these swings are within this hourly. Well, in this case, it's more than, it's 3-4 bearish candles. But let's try and reduce it to something like that and see. Yeah, that's a little bit closer because you have 3 bullish candles pushing out of this area, even though the whole area should be taken into consideration because there was reactions here. This whole section was where the bears tried to climb in and push it lower, but they couldn't get it lower than this swing point. I'm just going to move that a little bit. Couldn't go lower than that swing point. They did, however, attempt this one swing point. On the 15-minute, you should have closed underneath that. Nope, didn't close. 5-minute. 5-minute you closed, but that's low. You would have a close on one of the candles, 1, 2, or 5-minute candles or whatever. So as it stands right now, on the 15-minute, this is an area for it to attempt to come and test. That's a base. But we have this whole section here that there was bears that attempted to push it lower. There were bulls that completely overwhelmed them in this area and then started pushing higher. We came back into it and then we started pushing off of it again. So I want to see a reaction here. It's a massive section. I mean, it's it's $20. It's a massive section, and I normally try and take $5 as a stop loss and $7.50, so 50 pips versus 75 pips. This is 200 pips movement right here. So yeah, still a lot to test and to try and break through. On the 15 minute, so far we are still bearish. On the 1 minute, why did I click on the 1 minute? On the 5 minute. On the 5 minute, we had a double base candle and then a continuation lower. And the nice thing about this is the Tokyo low. So price didn't really have a reaction point there, but like, let's say Tokyo, this is why I'm talking about areas of interest. Pushes higher, makes a higher high, comes lower, higher low, pushes higher, makes it all new high, pushes lower, reacts off of this area, wicks off of it, first reaction, second reaction, and then pushes higher, but doesn't make a new high, pushes lower, consolidates, pushes lower, breaks through the support area, the Tokyo low, attempts to come and test it again, so a break and retest. This is the break point, this is the retest point, this is the continuation of this downward trend. So in this case, it could have been a very nice entry point if you wanted to, once again, hindsight, to have entered on the break, on the retest failure, or the confirmation of continuation, because once again, on the 15 minute, just going to take that, on the 5 minute, you have a base candle here, because it's just two and they don't break the structure itself, and you have the continuation going lower. So that could have been an entry point on the 5. On the 15, once again, you have the break push lower, you make a base, you have the test, and then the confirmation of the close, which is right there, of it continuing lower. You could have marked this one up something like that, and you could have left that potentially for a test for this swing zone over here for a reaction, because it's still bearish as it is now. And funnily enough, you do have a small little bearish, a bullish base there, because it's in the 15 minute, it's opposite direction to the trend, but you wouldn't have known that this was a trend at that point in time. Price would have needed to push higher. In this case, we know that we're in a bearish trend because there's multiple downward legs. So this is just a continuation of that downward leg. But yeah, the swing points, we're on the 15 minute. 15 minutes got 11 minutes before it closes. So far, it's reacting off of it. But we still need to wait for this 15 minute. I mean, you could have seen on the 5 minute, it's reacted like it basically just closed. So I take this as effectively as it's closed on the swing point. So it hasn't broken through. Divine Trader, is it rally-based rally, drop-based drop type of price action strategy? Yes, it is. It's always within a trend, and then I'm looking for a rally, a base, and a confirmation. So the second rally is the confirmation. So you can think of it as the first rally in the RBR or the DBD. The RBR, rally-based rally, the first rally is in line with the overall trend, which is bearish. Rally, it's bullish. So it's pushing higher. The base is opposite to the trend, and then the confirmation of the next rally is that bullish candle, and that would be the entry point. And then the drop-based drop is just the inverse. We're pushing lower, we're making an attempt to push higher, and then we have the confirmation on the next drop, and that drop is the confirmation of entry point. So I do it on the 5 and on the 15. That's all I look for. And the thing is, you do have days where you have consolidation. Like, I'll give you an example. Yesterday on the 5 looks very nice on London. So this whole section. So price pushed higher. So we were, during Tokyo, we were bullish all the way. And then when London opened up, which was over there, we slowed down ever so slightly. But this candle over here on the 5 was still much higher than the most recent swing, low swing, which was this point over here. If I can just move this out of the way, which was this swing point over here. So the most recent attempt to push lower failed. And what you can also notice is that you have, when it attempted to push lower, you have this little area of consolidation here. Price wicked into it and basically made a small area of consolidation of its own during this area over here. And then price pushed out of it, wicked back into it, and then continued higher. So technically, you are on the 5-minute time frame. You still have your rally-based rallies, but it's more subdued. It's like more of a breakout off of a consolidation area, a breakout and then a retest and then confirmation. So that could have been an entry point, as an example, on gold, and then I would have looked for something like that. But if you look at the overall structure of the day, it's not really making headway. Yes, it's got a higher high, it's got a higher low, but then it's got a lower high, and then it has like follow up lower point, but then it makes an equal high, and then a lower low, and then a lower high, then a lower low. But overall, it's like trending slowly downwards. So no volume, no momentum, slowly moving downwards. So there's areas where you can enter, but you can see with the price action as it's moving that it is slow, it's indecisive, and then you start having your reactions, your moves, pushes higher. It breaks the structure strongly, not like here where every time it breaks a structure, it's effectively a little candle, or it just wicks into it. The structure up over here wasn't tested up until it got tested over here. But this is too late in the day. I can't trade this. But the point just still stands that it's the rally-based rallies. You can also see it in, or you can see that you're going to have a sideways day. Why am I doing this like so slowly? You can still get your movements. Wait, I just lost my train of thought. Ugh, man. My head is so fuzzy today. When you have consolidation on a day, or you don't have these like really like strong momentous movements, like there's a lot of momentum in the move, like you have it over here. You have multiple candles that just doesn't have big bodies. The wicks are almost equal on both sides, so this doesn't give you all that much confidence that we're like that there's a lot of momentum. Here you start seeing more momentum in the market, as an example. So if I just had start a new one, if I just saw this as an example, then I would say we are going to push higher just based on this information, because we have consolidation down here. We have a break of that consolidation here. Oh, come on. We have a break of consolidation here. We have a retest there. And then we have the continuation, and then we have a rally base, and then another rally. So your rally base rally here rally on this one, I would have entered on that, and I would have looked for my 1 to 1.5, and that would have been the trade. So just looking at what price does afterwards, you can see, oh, okay, now we're starting to push lower. if I had, let's say, for argument's sake, a 1 to 2 as an example, I would have lost this trade as an example, because it's consolidated a little bit more on the day. So I don't have this information at all. So there's just no point in me saying, oh, I have to wait for it to be a bearish day as an example before I decide to take a drop-based drop. I can see it based on Tokyo's movement, and I can see it based on the reaction off of these little consolidation areas, small little areas where price is not really making higher highs, it's not really making higher lows. Here's another small one. And I mean, you if you go down to the one minute, which I freaking hate, but you can see it on the 1 minute quite clearly as well. So long areas where the tops and bottoms are similar, and then you have a break, and then it breaks, it doesn't really test lower, then you know, okay, cool. This break that I had here is everything that's in here is still to be tested. It's not testing it, cool. We're in a bullish trend. But I don't use the 1 minute. I have it on here because we have competitions on Fridays, and on Fridays I generally try to go down on the 1 minute to try and see if there's any short-term time frame stuff that I can have a look at. So on the 5 minute, still on this one, we're still pushing bearish. Once again, if that was the entry point, it would have succeeded. It would have the 1 to 1.5 would have been a good trade. Same thing here as well. Pushes lower. It doesn't close below this swing point, but then it attempts to push higher and it fails. I'm not a fan of the massive wicks, but in hindsight, this is a similar idea. But I generally don't just take the very first drop-based drop or rally-based rally. I wait for the confirmation that it's still within a trend. You can also have a drop-based rally and a rally-based drop. Yes, you can. That is true. But those are the ones that I generally look at more in consolidation. So for me, the drop-based drop is purely within the trend itself, the trending days. Dave Rankin, hi, y'all, bit late. Better late than never, mate. In the wild saying, below 200 and VWAP at the moment. Personally, I'll be looking for shorts right now. US Open often sends price the other way when COMEX, which is obviously the futures on gold, opens after a 1 hour pause. So I do have the gold futures here. So 200 and VWAP. Volume weighted average price, and then what would you just have it on the 20? Just standard, just the chart time frame, it's fine. And then 200 EMA. So 200 EMA is going to be way down here somewhere. Where the hell is it? Why aren't you showing, bruh? Why is the 200 EMA not showing? I don't know. Error. That's fine. Whatever. Doesn't really matter. Let's see. Okay, there we go. For gold, yeah. So below the 200 EMA and the VWAP at the moment, obviously. This is the 200 here, so we're above it on gold futures, and then just the VWAP. whatever. So I get what you're saying. Obviously, also looking at gold shorts, it's still continuing. I mean, even on just the spot price, to me, it's still bearish up until it proves on the day that it wants to push higher. Oh, on the 5 minute. Oh, yes. Yeah. 100%. So, makes sense. Dave Rankin asking, what are we talking about? Never heard of these drop base and rally expressions. It's not a new thing, to be dead honest with you. It's something that I think has existed. The expression, I think, has existed for a very long time. To me, that's what I call it. Drop base drops and rally base rallies, and base areas as an example. But it is just, I think people refer to it as order blocks. It can be referred to as a retracement as well, where if you're in a trend at the moment, price is trending lower, and then you have a small little pullback and then a continuation. So technically, this whole box here would be known as the base, as an example. But it is within trends. So if market is trending higher, then it would be a rally because you're rallying higher, and going bearish is dropping. So no, I don't know. I don't trade ICT. I've never gone through any of his stuff. I know about his stuff because it's full of the internet. The internet's just chock and block of ICT people and his teachings, but nothing that he's ever mentioned is a new concept. But I don't trade ICT. ICT is not something that I trade. But I don't take offense if you think I'm if you think I'm trading ICT. I see Infinity is saying that he cannot chat in the YouTube one. It's probably because you're not logged in. But at the bottom right, you would have a live chat section. It should be slightly to the left of the rightmost panel. It should be there. So where did I learn about this? So the short answer is from just paying attention to trending markets. So you can technically say that there are people that have a rally-based rally / drop-based drop strategy or viewpoint of the market, but theirs is higher time frame. So they would go, for argument's sake, to the 4 hourly, and then they'll say, okay, cool, we're rallying, and then we have a base here, as an example, which is exactly the same as mine, just I use it on the lower time frame. So I know that there's what is his name? If I remember his name, I will post it in the Discord. There's I don't know if he's Austrian or if he's from Switzerland or if he's German. He's one of the Central European countries. Can't remember his name. But I've heard him talk about the rally-based rallies quite a bit. But I didn't learn his course or anything like that. It was purely from just paying attention to the market, saying, okay, cool, we're moving higher, we're attempting to go lower, we're moving higher. So there's okay, rally, this is a base area. It seems like it's price attempted to come back to this area. It failed, it continued higher. Okay, so it's rallying off of this area. It's the idea of the rally, I think, is more how momentous the movement is from out of that base area. So with the drops as well, it's dropping hard. It's attempting to go higher, and then it carries on dropping hardly as well. Yeah, no problem. Like I said this morning, I'm feeling a little bit under the weather, and my brain is like fog. I don't know what the hell is going on. Woke up headachy, like had a headache, like just I don't know, like tired, just mentally and physically just tired. So if what I'm saying sounds far-fetched or it sounds incoherent or doesn't make sense or whatnot, just understand that my brain ain't braining today, mate. Divine Trader is saying, I also don't trade ICT, but know some terms which are similar or just copied from Wyckoff. Yeah, the majority of his teachings, let's say, is from Wyckoff theory, and there's a few other theories. There's a few things that he's literally just copied word for word. Like the turtle soup strategy, as an example, is not even his. It's copied word for word from a lady and her trades. But yeah, I also know some of the terms, but like, give you an example. If we talk about let's go to the hourly. Let's talk about fair value gaps. So that would have been a fair value gap as an example. You have 3 candles, the wicks don't break lower than the middle body. This is not a new concept. Fair value gaps is not something that the name, yes, fair value gap is something that he coined, but the principle is just an imbalance. It's a very strong movement, a continuation movement. He's just gone and said, oh, okay, cool, I'm going to call it a fair value gap because this is the area where this gap between the three candles is an area where price could like move towards to try and fill, because it moved through that area too quickly or too strongly, as an example. So it's imbalanced. There might be sellers waiting or buyers waiting there in this case. So the concept is not new. He just changed the name and then said, I'm the one that created this thing. You gave the word for it, but the concept is not a new concept. The last time there was like a really new concept in trading was when algorithmic trading came to the retail space. Algorithmic trading was already being used in the industrial side of trading, the banks and the hedge funds and whatnot. But when it came to the retailers, that was new. That was the last time there was like a new, let's call it, aha, wow, this is a new thing for trading. Everything else, every strategy that exists today has existed in some way, shape, or form for the last 30 years, as an example. Sapphirs ain't good early morning people. Normally, I'm a pretty good morning person. Like, if my alarm goes off, I get out of bed immediately. I'm up. I start doing my things. But not today. Today is, I don't know. We'll see what I'm like after I've had some breakfast and yeah. But as it is now, just taking some meds. So hopefully it will go a little bit better. True, these imbalances way before came. Yeah. Not a new concept at all. In the wilds, gold futures contracts are a strong driver of the global spot price. That's why they are mostly synced in price. Not always, but most of the time. Good to know when you're trading Miss Goldie. That is true. I agree with you, because especially if you're looking at the futures market in this case, and if I literally just, this left-hand side is futures market, right-hand side is spot price. Same time frame. The similarities are, it's almost identical. On the spot side, we're a little bit flat. On the future side, we're a little bit flat, but on the spot side, we're pushing a little bit bullish. So the correlation is 1-to-1 almost. Puli Divine Trader, Barry is the guy to ask about ICT. He actually trained personally with the main guy. Yeah. Just as well, Will isn't on stream with you dissing his hero ICT. Poor lad just got his shed turned into a shrine with an ICT wallpaper and a chandelier. Full-size 3D model of him too. Not even a wax one, it's like a silicone one, so it's like it's got real feel. Like if you touch the skin, you're like, oh yeah, this is ICT. What is his name? What is ICT's name? Who cares? Nobody cares. Pop and milk. Yeah. I mean, I can do that. Pop, for those non-Afrikaans speakers, is porridge. It's maize. It's a maize meal. Porridge, so I can make pop. And milk is milk. Who is Barry? Puli seems heard somewhere. Yeah. Barry is along with Puli, because Puli can be like an absolute fucking troll as well. But the two of them together is the quintessential idea of chaos, and we love them for it. Barry runs this joint, mate. Yeah, I mean, if we look at the chairman, we do have Chairman Puli. Will's model has holes in all the right places. That is true. Has any of you ever met CC? I don't think CC exists. I think CC is just the name that he gives for his ICT lifelike feel model. Tag team me and Braza. Yeah, that's true. The old in body but young in spirit, guys. Two of you causing chaos. She's an AI catfish. Like I said, none of us have actually met her. We don't know if she exists. ICCT. Exactly. You see? Now, if Will was here to defend himself, he would have no opportunity to, because we know the truth. We know it. And I'm telling you guys, the comments that we're getting in, I don't know, in YouTube from CC, it's either Ewan or it's a chatbot. It's one of those two things. His motivational speeches are lit. I heard them after listening to him. Always can leave job. The thing is, Will is incredibly charismatic. And the stuff that he says resonates with a lot of people. So I had a discussion with him yesterday after the stream for about an hour. We were just like chatting after the stream itself, and we were just talking all kinds of crap. The previous week, Friday, I wanted some advice from him after the stream as well, and he gave it freely and openly. Just gave the advice. He listened well. So in terms of motivational speaking and listening, he does listen, and his motivational speeches are pretty good. I'm not gonna lie. Less of he old. Yeah. Less of the old. Right, let's have a last little look-see on EU and GU. Oh, this is still the hourly on the 15-minute. Okay, I'm going to just remove this because I didn't take this as a trade. It was just the trade idea. So on the 15-minute, we have made a double base. We're still a little ways away from the support line, but let's have a look at the hourly to see whether or not... Maybe that would have been a little bit better. The last area, basically. 30 minutes to go. We have quite a wick above the body, but we are still attempting to push lower. So still bearish for me. I would still want to see the reaction off of the support area here. EU also... Oh, this is EU, sorry. I had them swapped around. EU is still bearish. Pound is also still bearish, but Pound has come and wicked into this 15-minute base area. Consolidated ever so slightly. Attempt to push higher. This is a 20 EMA. This is a 50 EMA. The 20 EMA, it basically reacted off and then pushed lower, but it's not making it's not making a case for it wants to push all that much lower, let's say. This 15-minute candle, which just opened up now, is going to be a telling sign. On the MACD, you can see some slowing of momentum as well. You can see it on EU as on GU as well. What the hell is wrong with me? This, I'm going to swap them around. GU is always on the left. EU is always on the right. Yeah. GU is looking like it wants to react off of this 15-minute base. So there is a potential for it to maybe start pushing a little bit higher to come and test the 15-minute 20 EMA as an example, or it can come and test this base area. But what I do see is, so this 15-minute base over there and this double base that's over here, it just wicked into it now as well. But now, this is another interesting thing that maybe we can discuss tomorrow. The idea of the end, when price comes to the end of the downward move. So this whole box here, effectively, can be a discussion point where your bearish bases become larger and your bullish attempts become larger as well. So this is something that we can probably discuss tomorrow. But yeah, I think for now, we've probably come to the end of the stream. It's already past. I need to go and get something to eat and maybe go and touch some grass and look at the sun. I don't know. If I had Will's confidence with my strategy, I'd be trading from a bungalow in the Seychelles. Agreed. Like, that guy is brimming with like youthful confidence, but deserved confidence, because he's a good trader. He's a good motivational speaker. He's a go-getter. He goes, and if he has an idea, he takes it. He doesn't wait for somebody else to do it. So definitely somebody to keep an eye on. So why didn't you take the short into your buy zone? Like I said, I don't feel good today. I have noticed with my back testing and with some forward tests as well, and some live tests, live trades, that if I have not either slept well or if I'm sick, I don't make very good decisions in the market. I get overzealous, or I feel like I'm forced to do something because you're feeling bad, but it doesn't matter. Still go ahead and do it. On days like today, where mentally I'm just not 100%. Trying not to trade. It's just historically, it's just not worked out for me when I try and trade on days like this. But yeah, cool, Barry. Thanks. Have a good day, everyone. Guys, don't forget, we still have the Fiverr stream this afternoon. It's going to be in about 2 hours' time. Go and have a look there. I know Barry hates the Fiverr, so we'll probably not see him, but yeah, everybody else go and make a turn there. Thanks, Rix. You did great today, even though you're under the weather. Yeah, thanks, mate. Fully, I appreciate that. It's one of those things. It happens. Not much that I can do about it. All right, guys. Thanks for the support. Thank you for hitting that like button and subscribing if you are new. All of the links are in the description, and then I'm going to see you guys a little bit later. All right, guys. Cheers.